So the third question, whether alternative monetary policies to the ones we adopted, well, obviously we could have had permanent monetary financing of government spending, as alternative, a version of helicopter money which is particularly designed to support government spending. The key thing here, how key is a good question, is permanent. That is to say that the government would choose, the Bank of England would purchase government bonds or just provide government with money and would never ask for it back. That then becomes reserves in the banking system. I'll come to that in a moment. They could have, of course, my friend Eric Lonergan has particularly pushed this, have direct transfers of central bank money to the public. That is the helicopter drop. You could have imagined that. We could have had even more negative interest rates than we've had. Martin Sandbu, my colleague, has argued very powerfully for much more negative interest rates. And of course, though we didn't do it, the Japanese do it, we could have gone for a really serious yield curve management with I'm just giving alternatives to what we did, in which we targeted long bond rates down to a T, and that's what Japan has done with the 10-year bond, which is targeted at 0.1%. And so all these options were available and remain available. Obviously, a central question, which Joe has already talked about, is if we went for any of those, these are obviously involve, some of them anyway, involve a very direct relationship between the central bank and government. And the question is who then controls the monetary policy decisions? Central bank, the government, or together, and if so, how? That's a very big institutional and constitutional, almost constitutional issue if we go particularly for the first two of these alternatives. But if we go for more negative interest rates, and it's clear that we're going to have very negative interest rates for a very long time, we probably have to get rid of cash. It's a big question in the debate, we can go into that, but that's also quite a big deal. And so we already have an incredible amount of negative yielding debt, about $16 trillion out there of negative yielding debt. Well, if we go on for far more negative, all the debt could be negative yielding, and that would be very exciting and of course completely demolish the pension industry. And most of the insurance industry in Europe anyway. 4, is monetary policy now exhausted? Well, I've got 2 more minutes, so I think I'll manage it. No, it definitely isn't for the reasons I've already discussed. There are lots of things you could do with money in combination with fiscal policy or in some other way. But what I think of now as conventional, unconventional policy, by conventional, unconventional policy, I mean very modestly negative rates and very large purchases of market assets, which is what we've been doing. That probably looks sort of finished. With a qualification I'll come to at the end. But next time, as I've already mentioned, we could have interest rates that are even, if we have another downturn, we could go far more negative. That obviously would imply that we would, as I said, probably get rid of cash, and it would require negative yields on deposits. So when you put money in the bank, you will be taxed. That might not be terribly popular. If I discuss it with Americans, they say, if that were to happen, people would come and basically lynch Jay Powell. They're not using, actually they would shoot him. So, being America. So that might not be a terribly good policy option. And basically, as far as I see, every central bank that's gone negative has worked very, 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 very hard to ensure that ordinary people's depositors don't have negative yields. It's a very important political point. Helicopter money would also still be possible, and I see in the audience somebody who will talk about that yet later, and has written a book about it, which I recommend, if you will remember. So it's a very good discussion of that issue, and I like helicopter money up to a point. But the key point I would make is, as long as inflation stays low, a very big proviso, monetary policy is never really exhausting. So even if we go back to assets, I once wrote a column about this, the central bank could in principle buy everything. I mean, everything. The entire stock of housing. Is there a price at which you would sell your house? Yeah. Every stock, everything. So monetary policy is not exhausted. It would get very, very tricky to explain, but it's not exhausted. So this is where we are now. If we look at conventional, unconventional policy, the only point I'd make is basically only the Fed has any rule. But if I go, I don't have well, at least if I go to interest rate policies, basically, if it doesn't get super negative, only the Fed has any room. If you look at asset purchases, I did have this, you know, Japan is up to 100% of GDP. We're nowhere near that, so we could do that. That's what I mean by saying you can always buy everything, and the BOJ has gone a long way towards buying everything. But it doesn't yet own all the financial assets in the country, so it could actually buy them all. And then, of course, it could do what I recommended 20 years ago and buy all the foreign exchange in the world to crash the yen. I mean, there are no limits if you don't worry about inflation. And inflation so far, I've just put that to show that inflation has been a sensational non-problem. The UK and US have basically managed to keep core inflation fairly close to target. The Japan and the Eurozone is nowhere near. So inflation isn't a problem, at least at the moment. And so that gives them the possibility of doing some very wild things even by the standards of what we do.